This video is all about real estate investing. This is a topic I get asked about all the time by people that know I invest in the markets. So I thought I'd put this little video together to share with everyone what I think about real estate investing, what I think is important, and how I think about investing in this asset class. For those of you who are new to my channel, my name is Jared Ayers. I'm a CFA charter holder, and I've created this channel to effectively do what I'm doing today, and that is share my ideas, thought processes, and approaches to investing across any and all asset classes. So I hope you enjoy. So before I jump into the specific ideas I have around investing in real estate, I do want to be clear, this video is not going to cover the financing side of real estate investing, so no mortgage REITs, no financial lending type vehicles for real estate. I'm just going to focus on actually investing in the real estate assets themselves. So jumping then into the types of vehicles I want to cover today, namely real estate investment trusts, which are basically corporations set up to buy real estate assets, usually for rental purposes. So they have usually a very broad spectrum of assets within their portfolios. Sometimes they'll be geographically focused or sector focused, which we'll get into a little bit later. And the other type of vehicle is, of course, direct investing straight into the assets. So those are the types of ways I'm going to talk about investing in real estate today. So on the REIT side, publicly traded REITs have a few attributes that you probably want to be aware of. I think one of the misconceptions out there is that, you know, when you go as a market investor and invest in a REIT, you are diversifying your portfolio, and I believe that is true. However, when you are investing in a publicly traded security, what ends up happening often is it's offering diversification up until the point where the market falls, and generally REITs get hit along with everything else, so you don't necessarily see that offsetting behavior in your publicly traded REIT portfolio like you would maybe have hoped, or maybe that you might get in a fixed income portfolio to offset whatever is happening in the equity markets. So a few things about publicly traded REITs as well. They are interest rate sensitive. So as interest rates rise, generally they perform, they perform poorly or less advantageously. They do attract yield chasers. So obviously REITs are set up to be income producing entities. They have regular distributions, and they are usually set up in a tax advantaged way to be able to do that, and so they usually throw off a fairly decent yield, and so they do therefore attract people that are interested in yield. So, you know, as that yield changes, then, you know, the prices of those assets may change in relation to how popular they are with folks that are looking for yield itself. So that's another thing to consider. You know, with all types of real estate, no matter how you invest in it, it does offer some inflation protection, and that's mainly due to, you know, the ability to increase rents along with inflation. So that's something that's obviously a benefit of having real estate in your portfolio in any capacity. So, you know, those are some things to think about. If you do want liquidity, publicly traded REITs are obviously a good idea as well. If you want to be in and out of those types of assets, it's far easier to do that with a piece of paper and a click of a mouse than actually selling a piece of property. So that's, you know, something else you do want to consider as well when investing in that type of vehicle. Just to break away from the publicly traded side to the private REIT side, my only statement there is really investor beware. You know, when it's not publicly traded, although they are generally regulated by securities commissions, they're not as easy to regulate. And I've seen private REITs basically, or entities that have called themselves private REITs effectively act like giant Ponzi schemes and eventually implode. Now, that's not to say that's what all private REITs will do at all. I'm just saying that as an investor, you really have to know what it is you're buying. There are certain rules that publicly traded entities, even REITs, have to follow that may not be the case if they are privately held. So my only caution there would be to really understand what it is you are buying into. And then I guess the other vehicle that I did want to mention, of course, is direct investing into real estate assets. So obviously, if you do have the capital, then that's an option for you. Of course, it depends on what the purpose of the investment is, how much skill you have, and how much time you have. So those are also considerations. Are you buying the real estate investments for income purposes, or is it sort of one of a buy and flip type arrangement? Of course, that takes a very different skill set in and of itself. So that's something to consider. It definitely will give the best diversification, in my opinion, because what happens in a privately held real estate asset is not going to be the same as what's happening in, say, the broader stock market. So from a diversification standpoint, I think that's probably the best thing that you would be able to achieve through real estate investing, having those assets effectively offsetting other types of asset classes that you hold in your portfolio. So just a quick note also on real estate sectors. Broadly speaking, there really are 3 sectors that I would ever consider investing in, and that's basically residential, commercial, or industrial. Again, depending on the geography, depending on what you believe is going to happen, and depending on, say, if you're investing directly in the assets or through a REIT. Obviously, you can mix and match and potentially diversify across multiple sectors, but really, it should be fairly obvious, but residential being obviously dwellings for individuals or families, commercial being, say, retail space or commercial buildings, office buildings, those types of places, and industrial can range anywhere, I think, from warehouses up to full manufacturing facilities and those types of assets. So just something to consider as well. Again, what is your objective? What do you think the long-term trends are in each of those types of sectors in terms of demand? May also be considerations when you decide on which sectors you want to invest in. Okay, so now on to the best part of this topic, in my opinion, and that's mostly because I'm a nerd, but that's really has to do with the math associated with real estate investing. So I just want to run through a few terms and calculations that I think you should probably be aware of if you are investing in this space. Don't worry, everything I'm going to be talking about will be included in the description below this video, so you don't have to take notes. You can just listen and follow along, and then if you want to review the description later, you can. So the first one I want to bring up is net asset value. So net asset value is effectively the net operating income for a property divided by what's determined as the market cap rate. So that basically gives you, say, basically the market value of the property, and then from that you remove the mortgage debt, and that gives you your net asset value. Now, in a REIT, that would be basically a calculation that would be done on all of the assets in the portfolio. And so then you have basically the net asset value for a larger REIT, and then you're saying, okay, so what? Well, the net asset value is often compared to, at least for publicly traded REITs, the share price. So you take the net asset value of the entire REIT, divide by the number of shares, you get the net asset value per share, and then you can compare that to the market share price for that REIT. So generally speaking, these REITs are then talked to as if they are trading at a discount or a premium to the net asset value. If the REIT is trading at a discount to the net asset value, then effectively you are getting the security for a discount relative to its net assets, which in many people's opinion is a good thing. The next calculation I think is probably the most important calculation you want to be aware of when investing in real estate. It really helps compare properties in, say, even different locations or different types or sizes or whatever. It really helps you compare apples to apples across all of them, and that is the cap rate for the property. So that's effectively the once again the net operating income divided by the market value of the property. So that's usually in, say, a single digit or low double digit percentage is how that's usually termed. And of course, the higher the cap rate, the better the investment, all things being equal. So, okay, so then the next question would be, how do you calculate net operating income? So if you take the, say, monthly rents for the property, multiply by, say, 12, that becomes your total potential rental income plus any extras that the property may generate, parking, etc. Then you would from that take away any assumed vacancy. So if there's a vacancy rate for the area or the type of property, then you would apply that to that, plus say an allowance for any losses due to tenants not paying rents or what have you. So that gives you basically what your expected rental income would be, and then from that you take away your operating expenses. Now, operating expenses, okay, so what does that mean? Just to be clear, what that means really is property taxes, insurance, anything to do with repairs and maintenance that's not a major capital expenditure. So regular repairs and maintenance of the property on an ongoing basis, plus any other types of costs for the property, like if you have any legal or accounting or what have you, that may be an operating expense of holding that property, plus any management fees if you are, say, having a management firm manage the property from a tenant perspective. So those would be considered operating expenses. What is not included in operating expenses is any interest or debt repayment. So if there's a mortgage on the property and there's a principal and interest component to repaying that mortgage, that's not part of the operating expenses. Anything to do with amortization, depreciation, any leasing fees, if you have, say, a leasing agent finding tenants, any expenses paid to that agent is not counted in those operating expenses. So it's good to be aware of the components that are in that calculation versus those that are out. Again, I'm going to include everything at the bottom of this, but basically what you want to see is, from a cap rate perspective, is what can that property generate, the unlevered, unencumbered, ability for that property to generate income, divided by that market value, and then you can really then see, what that property can produce. And then once you have that, as a guide, then you can look at, well, what would it produce in terms of net cash on cash return, meaning if you put, say, a deposit down and mortgage the rest of the property, at various levels, various deposit amounts, what could that property generate for you in terms of a return? It all comes back to the market or the cap rate. That's kind of your starting point before you even start down that path of seeing how much leverage you could introduce to the property, and therefore how much cash you can generate from that. So that then brings me to the final question, the one that I often get asked, is how should I invest in real estate? The simple answer is I don't know. It really depends on the person's objectives. So what I'll throw back at someone if they ask me that is, what are your objectives? Is it portfolio diversification? Is it yield? Do you have some sort of personal interest, or do you believe you are a real estate guru and this is your calling and this is how you want to invest your capital? That's totally a personal thing that someone has to answer for themselves. And then the next question would be, okay, so you know what your objectives are, how much capital do you have, and what is your time horizon? So different types of vehicles, different types of real estate lend themselves to different situations, whether it's your objectives and or your own personal resources, be that time, skill, capital, all of those types of things. So obviously, if you have a very long time horizon, you're not really worried about liquidity and being able to trade in and out of investments. If your time horizon is shorter, then obviously maybe something like a publicly traded REIT would be more suitable to you because you can get in and out of it very easily. If you have a ton of capital, then the world's kind of your oyster, of course. But if you did want to invest specifically in individual real estate assets, and you have a ton of capital, you could probably build yourself a diversified portfolio of real estate assets on your own. Maybe focused on areas that you have interest in, or the areas you know of in terms of geographic region, or perhaps you have an interest in a certain type of real estate, say commercial or residential. And of course there's all kinds of subsectors to real estate as well, whether it's long-term care homes, hospitality, all those types of things. So really it's a very individual choice and decision. Like I said, I believe if your objective is diversification, and for myself that's how I view this asset class, is I only look at it from a diversification standpoint. You've probably heard me say before, I see myself as making my money in equities and holding my money in the other types of asset classes. So for me, it's a place that I can put excess capital if I had it, but generally speaking, my focus is equities at this point in my life. Perhaps down the road, this could be a good asset class to think about diversifying into in a more considerable manner. Certainly it will provide, or could provide, an income stream sort of indefinitely for individuals or families, for future generations as well. So lots of things to consider. No sort of simple one shoe fits all type of answer, but it's something to consider, and I hope you found some of my ideas and opinions helpful for yourself. So hopefully you got something out of that video. Again, if you do have any comments, questions, or concerns, even your own opinions yourself, don't hesitate to leave those in the comment section below. If you did like the video, please do hit the like button and give me a thumbs up. And of course, if you are new to my channel and you'd like to see more of what I have in terms of ideas and thought processes around investing in this asset class or any other, then by all means hit the subscribe button, and you'll get notified of future videos no matter what the content. Until next time, thank you very much for watching.